Ms. Herting-Ru.
Mr. Speaker, sir, I will address the questions by Ms. Herting-Ru in today's order paper, as well as the written PQ filed by Mr. Desmond Chu for yesterday's sitting, as they pertain to initiatives in progress to strengthen the attractiveness of Singapore's equity markets. Now, the challenge of sustaining a vibrant and attractive cash equities market is not unique to Singapore. Globally, the number of IPOs, initial public offerings, and proceeds raised has been declining since 2021. This was driven by the trend of companies staying private for longer, and more recently against the backdrop of a challenging global macro environment and interest rate environment. In the first half of 2023, global IPO proceeds fell by 36%, while Asia-Pacific IPO proceeds were down by 40%. Many stock exchanges are also dealing with the trend of local companies looking to list on large overseas markets like the United States. For instance, the UK's largest chip design firm, ARM Holdings, recently listed in the US. Israel has a vibrant startup ecosystem, yet many of its companies list in the US due to its deep and liquid capital market and investor base. Nearer to home, Hong Kong is also looking to retain and attract more IPOs amidst the more challenging macroeconomic environment. Now, against this backdrop, we have shared in this House, most recently in November 2022, the initiatives that government agencies and SGX have established in recent years to support the attractiveness of our equities market. We have set up the 1.5 billion Singapore dollar Anchor Fund at 65, which is a co-investment fund by government and Temasek, and the 500 million Singapore dollar EDBI Growth IPO Fund to invest in high-growth enterprises at the late stage or at IPO. MAS has enhanced its grant scheme to defray listing costs and develop Singapore's equity research ecosystem. SGX has also been actively seeking cross-border partnerships with the regional exchanges to enhance its attractiveness as a gateway for Singapore companies and international investors to access regional capital markets and opportunities. In May this year, to expand access and connectivity to regional capital markets, SGX launched a Thailand-Singapore Depository Receipt, or DR Connect, to broaden access to capital and to markets. Overall, our initiatives aim to provide a more enabling environment for companies to consider listing on SGX. At the same time, Mr. Speaker, sir, we recognize that there are limits to how these measures can directly influence listing decisions. Companies considering possible public listings have several commercial objectives in mind. In some cases, these considerations may prompt them to explore listing venues outside of Singapore. First, they may decide to list in jurisdictions where they can secure the best valuations for their shareholders. For quite a number of companies, a US listing is attractive due to the US's deeper pool of investors and liquidity. Second, companies may list in jurisdictions that give them better exposure to their own target markets. For example, a company planning to expand its business in China may choose to list in either Hong Kong or China, or both. If we take an overly prescriptive approach by making government support to promising startups conditional on a local listing, we may end up imposing a rule that may be at odds with the growth plans of the company or the founder. Similarly, global investors that are in Singapore will ultimately determine how to allocate their capital based on their strategies and how they view the market. So again, if we prescribe that they must invest certain amounts in only locally listed companies we will effectively constrain their investment mandates and end up losing a larger pool of investors that adopt a regional or a global view. Let me next respond to Mr. Desmond Chu's questions on SGX's role in helping SMEs raise capital from overseas markets. Now, one way is to make sure that we have good sources of SME financing available to meet our SMEs' needs. And apart from a well-developed banking system that provides a range of financing options for our SMEs, SGX has Catalyst, a second board that caters to the fundraising needs of growth stage companies or enterprises, and it currently has over 200 SMEs listed on it. In addition, MAS has a grant scheme which defrays listing costs for issuers listing on Catalyst. In 2021, MAS increased the grant cap under this scheme from 200,000 Singapore dollars to 300,000 Singapore dollars to further help SMEs who choose to list on Catalyst to alleviate their listing costs. Apart from accessing public markets, private equity and venture capital, or PEVC for short, has in recent years been an increasingly important source of growth capital for promising startups. More PEVC managers have established their presence in Singapore and are coming in at earlier stages, which broadens the range of financing for our startups. Now, MAS recognizes the value of an attractive equities market as part of our overall financial services ecosystem. And that is why the government and SGX have in place a range of initiatives to better position our equities market. We will continue to monitor the situation closely and review and update our measures where necessary to adapt to the shifts in global capital markets.
Ms. Hertingru.
Thank you, Mr. Speaker. Thank you, MOS, for your reply. I just want have a couple of SQs. The first is, I don't think the question was asking for these firms, the grants to be conditional upon making these firms list in Singapore on the SGX or Catalyst as appropriate. But just to get a sense of how many of these firms are receiving grants of support from our various agencies, and how many of them eventually decide to exit via an IPO strategy, and then subsequently decide upon careful consideration that they want to move elsewhere, list elsewhere, as the MOS shared in his reply. And I think, and then does the MAS then track the reasons why, and what are the tensions between having a tech firm or just any startup decide to base themselves in Singapore, avail themselves to our grants, and then subsequently say that, oh, actually, we rather have access to funds elsewhere, or we rather try to access the capital markets elsewhere. So I think having the MAS to actually understand these tensions and the reasons why it's a good idea to be here, but not a good idea to raise funds here, whether or not MAS does studies and to find out, and once you actually find out the reasons why, it will then eventually become easier to amend or to sort of support our regulatory environment and regime to make these a bit more, address some of the concerns that these startups will have, with the ultimate aim of making, our SGX and, our capital markets regime, equities capital markets regime here in Singapore more active and, of course, deepen that pool and the markets here. And I think a sort of related SQ as well is, does SGX and various agencies track the number of locally incorporated and homegrown tech startups who eventually, on a yearly basis, I guess, decide to list and go for an IPO here in Singapore? And if so, can the MOS share the data? Thank you.
MOS Tan.
Just let me shift to this side. I thank Ms. Hertingru for her SQs. I think the idea is to help, and I think we're all aligned if we want to enhance our equities market. To the first question is we don't collect that data. That's a simple answer to the question. But as I mentioned earlier in my reply, we are doing all that we can to help to boost the equity market, but there is also a limit, because ultimately firms will have major considerations, commercial considerations, including valuations, including market, as well as including whether they can get the best kinds of valuations, secure best kinds of valuations elsewhere, as well as whether they want to list in a market where they are closer to the particular target market. So I think that's the question. I think if you ask any of the companies or firms, they will tell you that that's primarily a commercial decision. Of course, we'll do what we can, but I think ultimately it is a commercial decision. On a broader perspective, I'd like to share with the House also that in line with our Industry Transformation Maps 2025, particularly on the financial sector, we are constantly looking at ways in which to enhance and deepen our financial sector. And the financial sector does not, of course, as everybody knows, is just focused or just has a equities market. But we have a very vibrant foreign exchange market. We have a very vibrant wealth management market. We are into green finance. We're into fintech. And others also. So it's a dynamic, deep, and also very diversified financial market.
Mr. Louis Chua.
Thank you, Mr. Speaker. Firstly, I would like to declare my interest as somebody working with a financial institution. Just two SQs for the MOS. I think I understand MOS' point about it being a commercial decision for private companies to choose where they want to list. But I was just wondering what is the government's position as to a ruling such as that in Indonesia, whereby I believe the local companies can seek a dual listing, but they must also list on the local exchange. The second SQ is, of course, on top of listings, there's also a broader issue of delistings in the local markets, and I think it's something which has been a challenge for the last couple of years now, where the number of delistings have been more than the listings. So as a result, there is concerns as to whether or not this issue of perceived weaker valuations and lower liquidity, that could continue to result in a bit of a downward spiral. So just wondering, in terms of the delistings part, what is the government's approach towards addressing some of these issues? Thank you.
MOS Tan.
Thank Mr. Louis Chua for his SQ. Maybe I'll try to answer the second question first, which is regarding our delisting. Since 2014, there has been a trend where the number of delistings has surpassed the number of IPOs. As of April 2023, the total number of listed companies on SGX stood at 650. As I mentioned in my main reply, there are a variety of different reasons in which companies would list on a particular exchange, and also a variety of reasons why they would delist. That's based upon maybe how they view the market, whether they want to list overseas or they look at prevailing options. It could be different funding sources. They might want to go back to private, for example. So there's a whole different variety of why they would want to do so. As I mentioned earlier on also, I think it's important for us to try to play a part, but there's also a limit to what we can do to encourage listing. I don't have the an answer, but I think the short answer to your question, the first one, is that we just take a very different approach to Indonesia. Thank you.